What does Michael Burry mean exactly? By warning, this time is different. The bond market just figured out the hidden meaning. Today I'm going to tell you what Michael Burry actually meant when he tweeted, "This time is different." This New Year rally is losing its steam, except for AI sector, because of OpenAI's Chat GPT. According to Chat GPT, the stock market will crash on February 15th, the day after January's CPI report. The market expects a 6.2%. I think we will get a lower number. So there is opportunity in the markets before the Fed cuts rates. The stock market is totally freaking out, selling Google shares because their AI Bard made a mistake, and Google search's monopoly is being disrupted. So the big boys are buying up big name AI stocks like Nvidia and Tesla. Innovation and disruption is totally real and affecting the market in a big way. Art of investing is knowing the competitive landscape of industry you are into and pick the disruptor. If you want to know what's in my personal war chest of a portfolio, you can become my Patreon today. What is death spiral convertible? What does Michael Burry mean by warning, "This time is different"? I will explain it all right after this.
And of course, smash the like button. If you want to be my good boy, apply to write your first book with me.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get it into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Disney just announced they are cutting 7,000 jobs. And the layoffs are finally showing in government data, which, according to Powell, is very high quality data. So, anyways, initial jobless claims went higher than expected to 196,000. And continuing jobless claims went higher too. The stock market noticed that kind of contradicts last week's blowout jobs report. So it opened higher but sold off during the day. The bond market obviously likes to see the weakness in the economy. This makes 2 to 10-year yield curve inversion reaches the most extremely inverted since 1980s. That is the bond market telling the Fed, you are hiking it too much and you are going to cause so much pain. On the deflation side, once CPI turns negative, as Michael Burry just tweeted, it's time for the memester look up what's death spiral convertible. Death spiral debt describes a type of convertible bond that forces the creation of an ever-increasing number of shares, inevitably leading to a steep drop in the price of shares. In general, convertible debt is a bond that yields interest but also can be converted to a number of stock shares. It's a hybrid security with some attributes of both a bond and a stock. The type of bond that can cause the death spiral effect is a convertible bond that can be converted to a set dollar value, paid in shares. As a stock's price increases substantially, investors in conventional convertible shares are likely to seize the opportunity to convert their bonds into fast-growing stocks. However, a stock price decline motivates the owner of fixed value convertible bonds. They can get more shares of stock when they make the conversion. But this process, by definition, increases the number of shares in the market. And that forces prices even lower. The death spiral effect occurs as more and more fixed value convertible bond owners convert their bonds into stocks as their value drops lower and lower. Theoretically, the death spiral effect can continue until the stock is at or near zero value. This type of bond is sometimes issued by a company that desperately needs cash. A company that seeks death spiral financing probably has no other way to raise money to survive. I think the next crisis is going to be a debt crisis, as the Fed is pushing the interest rate limit too much for the upside. This will make smaller, weaker businesses default on their debt, which will affect the banks that give them the loan. Banks just like Credit Suisse. I think Burry is thinking the same thing as the small unprofitable company like Beyond Meat in 2021. They took out a $1 billion convertible senior notes. Note holders may convert their notes at any time to cash or shares based on the recent trading price of the stock. Within last year alone, Beyond Meat has burned through over $500 million. They only have $390 million on their balance sheet now and $1.2 billion of debt. They still traded rich from a valuation of $8 billion in 2021 down to $1 billion today. Their gross margin just turned negative last year. It's actually negative 18%. They have negative revenue growth. They can't make any profit. No free cash flow. How are they still trading at a price to sales of 2.9 today and valued at $1 billion? This really shows there is still a lot of air in this bubble. This really proves this is not the market bottom. Not even close. So what does Michael Burry mean when he says this time is different? He is saying that people are expecting the Fed to pivot, meaning cut rates because the economy is getting weaker and weaker, and the Fed wants to achieve a soft landing and a 2% target. But as soon as the Fed cuts rates to stimulate lending, the stock market will crash immediately like 2001. Because if the recession was called by the Fed, the stock market will already be bottomed out. Also, on the topic of recession, this week, when asked if she saw a recession on the horizon, Treasury Secretary Janet Yellen replied, "Recessions don't happen when unemployment rate is at a 53-year low. However, it just so happens the two recessions took place when unemployment was at a record low. One was exactly 53 years ago in 1970. And the other was 3 years ago in 2020. Currently, due to lockdowns, mass layoffs, and early retirements, job openings relative to job seekers are still at an all-time high. More importantly, real wages are deeply negative. So you don't need a lot of unemployed people to start a recession. All you need is a lot of broke people, which are all these bear market rally is for. Make people broker. So don't be greedy and take profit. Right now, we are not even close for the Fed to hit the terminal rate yet. This is why TLT was sold off today. The bond market is finally pricing in more rate hikes. Yes, it's that slow. When it comes to government, they take their time. They say the Fed is following the bond market. What does the bond market follow? The high quality data from the government, as Powell said, which could be controlled internally inside government and discussed it with the Fed over brunch. So the interest rate really is about expectation from the Fed. This time is different because in 2001, there is no inflationary bear market as we are having right now. Dot-com crash and financial crisis crash are both deflationary crash and bear market. As Thursday's market action from both stock and bond market, it tells us one thing, that this inflationary bear market is not over, and 6% inflation is still a problem. And dollar still can go higher. The dollar tends to have an inverse relationship with US stocks. So when the US currency rises, equities usually fall. That's because a higher greenback squeezes companies' overseas income, as they are forced to convert weaker foreign currencies into a stronger dollar. The US currency, which hit a 9-month low earlier in February, has since rebounded by more than 2%, as the Federal Reserve stands ready to push for higher interest rates to combat inflation. Rising interest rates tend to support a currency's value because they attract foreign investors seeking higher yields. As the bond market and the Fed decide their terminal rate, once we reach the terminal rate, the party is over. Or shall we say the after party just started, depending on which side of the trade you are on. Again, if you want to know the exact side of trade in my portfolio and when to make a move, all you need to do is become my good boy on my Patreon. And this is my collaboration book with all my incredible clients. The book is called It's Already Yours, Adversity Equals Success. Such an amazing book. And my book, Born to Shine. You are such a good boy for watching my video right till the end. Bye.